The inflation crisis is directly in front of us. And it is scary. I will tell you why, right now. I ask that you listen all the way to the end because you will benefit the most from hearing the complete analysis. A lot of people are caught off guard by the absurd speed at which conditions are changing today. For the majority of the past 4 decades, we have been in a low inflation environment, and as a result, many Americans do not even have a frame of reference for what it would be like to live in a highly inflationary environment. However, we are currently confronted with an inflation crisis that is unlike anything we have seen since the Jimmy Carter administration in the 1970s. Global governments have borrowed and spent enormous sums of money in response to the COVID-19, and central banks around the world have flooded their respective financial systems with new money as a result. This package of measures was implemented in order to stimulate the global economy. However, in the process, a terrifying inflation monster was unleashed, and it will not be easily tamed. In fact, national governments and central banks around the world continue to engage in the very practices that contributed to the emergence of the dreadful inflation monster in the first place. Things appear to be bleak for the foreseeable future. Listed below are 5 indications that the United States' raging inflation crisis is gaining momentum. For starters, inflation disproportionately affects those at the bottom of the economic food chain. However, at this point, even the majority of millionaires express concern about the prospect of rising inflation. A major source of concern for the majority of wealthy investors. According to CNBC's most recent millionaire survey, as many as 65% of millionaires are concerned about inflation caused by recent government spending, according to the survey results published on Tuesday. According to the report, 34% of those surveyed expressed concern about the situation very seriously. Participants in the survey, which was conducted online in April and May by Spectrum Group on behalf of CNBC, included 750 people who had investable assets of $1 million or more prior to taking part. I'll continue the video, and if you think you've learned something, please hit the like button. Also, don't forget to subscribe to the blog and to turn on the notification bell so that you don't miss out on any updates. And make sure you watch all the way through to avoid any misunderstandings. Thank you very much. In number 2, the world's largest financial institutions are now sounding the alarm about the impending inflation crisis. This week, a team of analysts from Deutsche Bank issued a warning that failing to address inflation will result in global economies being left sitting on a ticking time bomb. We were concerned that inflation would make a resurgence. Only a few people today recall how our societies and economies were threatened by high inflation 50 years ago today. Economic principles that have stood the test of time for millennia, such as the law of supply and demand, have not been suspended. We are concerned that central bankers are ignoring the painful lessons of the past, either because they truly believe that this time is different, or because they have bought into a new paradigm, that low interest rates are here to stay, or because they are protecting their institutions by not attempting to rein in inflationary pressures, as was the case during the Great Depression. Whatever the reason, we expect inflationary pressures to re-emerge as long as the Fed maintains its policy of patience and its stated belief that current pressures are largely transitory, according to our forecast. It may take a year or longer until inflation returns in 2023, but it will return. And while it is commendable that this patient asserts that the federal government's priorities are shifting towards social goals, failing to address inflation results in global economies being left sitting on a ticking time bomb. The third point to mention is that housing prices in the United States continue to soar into the stratosphere. Today, investment funds, wealthy individuals, and foreigners are all snatching up properties in anticipation of making huge profits, making it extremely difficult for ordinary home buyers to find a place to call their own and purchase a home. Earlier, I came across the following message from an exasperated home shopper on a popular discussion forum, which I thought you might enjoy. It's insane, as soon as a property hits the market, there are a flood of offers, mostly from investors and flippers, with real estate agents telling me things like, "We've got rich guys as far away as Hawaii, buying houses sight unseen, they leave and buy them in bulk, anything from dumpster mansions." It's insane. As soon as a property hits the market, there are a flood of offers, mostly from investors and flippers. We've got Chinese investors snapping up properties, Bill Gates investing in businesses, and, as I mentioned, flippers. It's simply not possible. Auction sites, as well as government-seized properties, are flooded with the same types of people who can't compete, and are outbid by thousands upon thousands of dollars above market value. Any tricks or strategies for buying a house, or anything that may not have all of the greedy bastards swarming over them, are outlawed. A family seriously in need of a place to call home appears to be completely SLL. It's not just my neighborhood that's in high demand right now, it's everywhere. Please, if anyone has any good suggestions, it would be greatly appreciated. Thanks. With $100,000 up for grabs every month, download the DraftKings app now and sign up with promo code MAPLE to be entered to win a free shot at the $100,000 prize pool. There are some restrictions on who can participate. See DraftKings.com for more information. Number 4, used car prices have now officially crossed the line into the absurd realm. We learned this week that the index of vehicle values in the United States has increased by 26% so far in 2021. Prices of used vehicles sold at auctions across the United States increased by 4.6% in May compared to April, by 26% year-to-date, and by 45% compared to April of this year. As reported by Manheim, the largest auto auction operator in the United States and a subsidiary of Cox Automotive, a used vehicle value index was released this morning. In the past, I would advise people to purchase used vehicles because I believed that, in most cases, you could get a better deal. However, at this point, I am changing my recommendation. As a result of the current economic climate, I strongly encourage everyone to consider purchasing a new vehicle, as used vehicles have become prohibitively expensive in comparison. The fifth point is that food prices continue to rise, and I continue to hear reports of intermittent shortages across the country. For example, in Florida, Papabi's owner Lori Ham reports that only a limited number of cases of chicken wings are being made available to restaurants in her area, and that the price for such cases has nearly doubled since the beginning of 2021. There are 300 cases that have been assigned to 2 counties, and I believe they were all gone in less than 2 minutes. According to Ham, a case of wings sold for between $70 and $90 per case at the beginning of the year. They are now selling for approximately $150 per case. This is what happens when you begin to wildly create new money in large quantities. Prices tend to fluctuate wildly, and shortages are common. Unfortunately, our leaders do not appear to have even a fundamental understanding of the laws of economics, and the suffering that we have already endured is only the tip of the iceberg in terms of economic consequences. If the world's leaders were wise, they would be taking emergency measures to bring inflation under control before it is too late to reverse the trend. Of course, this is not going to happen. Instead, they simply continue to provide food for the monster. This crisis is only going to get worse, so you should be prepared to deal with it as soon as possible. So there you have it. Thank you for listening, and click on our next video for even more interesting, and sometimes scary, economic and financial news. Watch all of our videos. We take pride in bringing you the very best. You may not agree with me completely, so let me know your thoughts. I am Mr. Smart Money, reminding you to stay smart with your money. Watch our next video right now. I will see you in our next video.